The global recession, also known as the Great Recession, was a period of economic downturn that affected much of the world in the late 2000s and early 2010s. The recession, which began in December 2007 and ended in June 2009, was the largest and most widespread recession since the Great Depression of the 1930s. The global recession was caused by a variety of factors, including the bursting of the housing bubble in the United States, the failure of major financial institutions, and the subsequent credit crunch. The housing bubble was fueled by low interest rates and lax lending standards, which allowed people to take out mortgages that they couldn't afford to pay back. As housing prices began to decline and people defaulted on their mortgages, the value of mortgage-backed securities, which were held by many financial institutions, plummeted. This led to the failure of major financial institutions, such as Lehman Brothers, and the credit crunch that followed. The global recession had a significant impact on the global economy. Many countries experienced a decline in GDP, and unemployment rates soared. In the United States, the unemployment rate peaked at 10% in October 2009, its highest level since the 1983 recession. In the European Union, the unemployment rate reached a high of 11.1% in 2013. The global recession also had a major impact on the global financial system. Many countries implemented measures to stimulate their economies, such as lowering interest rates and engaging in quantitative easing, in which central banks purchase government bonds in an effort to increase the money supply and stimulate economic activity. The global recession had far-reaching effects on industries around the world. The automotive industry was hit particularly hard, as sales plummeted and major automakers, such as General Motors and Chrysler, were forced to declare bankruptcy. The construction industry was also affected, as the housing market slumped and demand for new homes declined. The global recession had a significant impact on people's lives around the world. Many people lost their jobs, and those who were able to keep their jobs often saw their wages stagnate or decline. The recession also had a psychological impact, as people became more uncertain about the future and less confident in the economy. Despite the severity of the global recession, the world economy has slowly recovered over the past decade. In the United States, the unemployment rate has declined to 3.9% as of September 2018, and GDP has steadily increased. However, the recovery has not been evenly distributed, and some countries and groups, such as young people and low-income workers, have not fully recovered. The global recession serves as a reminder of the interconnectedness of the global economy and the importance of sound economic policies. It also underscores the need for countries to have robust safety nets in place to protect people in times of economic crisis. As the world continues to recover from the global recession, it is important for policymakers and individuals to learn from the lessons of the past and work to build a more stable and resilient global economy. This may involve implementing stronger regulation of financial institutions, promoting economic growth that is more inclusive and sustainable, and addressing income inequality and other underlying structural issues. By taking these steps, we can ensure that the global economy is better prepared to withstand future economic challenges and that people around the world can lead more secure and prosperous lives.